Hey everyone, it's Mike Valtos and welcome to the Orderflows market analysis for Wednesday, July 26, 2017. So there were no surprises in the July FOMC statement. Rates are held steady and no further hints were given at the start, for the start of tapering, and still expected at either September or December meetings. So, the lack of inflation, however, is giving some concern, though other economic assessments from the FOMC held steady and are positive. Dow ended up the day positive about 0.5%. S&Ps also didn't really, it was very uneventful trading as far as equities went, but there were still some very interesting things in the order flow, which I'll talk about here in a second. So, first, before we get started, a brief disclaimer: this presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that could be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Now, the tools I use in this presentation are the tools I developed: the Orderflows Trader, which is a volume footprint chart, and the Delta Scalper, which is a tool that reads the delta in the order flow. So let's take a look at some of these markets today. Talk about S&Ps, and S&Ps were kind of mixed on the day. I said Dow finished marginally higher, but S&Ps pretty much hold steady at the close. Now 8:30 when the cash opened, we popped up here, made a new high. We had a divergence, no ratio. We came off and we just sort of hung around the opening price. Now, when the market's directionless, it's just going to hang around the opening price. And just because you don't have one particular type of trader, either day time frame trader or long-term trader, in control of the market. And reason being, we had FOMC coming out today, and generally on the lead up into the FOMC announcement, it really quiets down. And you can see here we're trading in a range. Basically after the cash opened, we were trading basically 78 down to 74. Opening price was 75.25, and so we're just rotating around there, rotating around. Later in the day, just for the cash close, we made a new low, barely made a new low by a few ticks. Now, it was interesting because this blue line that I have drawn in here is what I consider yesterday's volume value area low, based off the volume profile from the day before. Where am I? Wrong day. Here it is. Okay, so yesterday I drew this line in here at 74 because we're coming down towards 74. Value area high for me was probably around here up at 78. So that's why I have this line drawn here, and I thought if we could really get below 74, maybe we could make a run at 72, which is the low at that time. And you can see how we ended up the volume profile like this. But coming into the morning, around 9, it was very, very thin volume here. Just a few hundred, if that even. And like I said, there was no support really to come in. And what happens? We finally, we got through it once and we rallied right back up. This was obviously right 1 o'clock here. But then later in the day, once things settled down going into the close, we got the stack selling imbalance here, came down, hit the low here at 72, made a new low at 71.5. Down here, what do you got? You got a ratio and divergence. I talk about these things every day until I'm like blue in the face. People are probably sick. Whatever, Valtos, you're crazy. But then what happens? We rally off that into the evening session here at 8 o'clock. We are, a move from 74 back up to 77. So, while there really wasn't much early, it happened late, and it happened closer to the close. Again, I'm not a big fan of trading going into the close, going into the cash close, but you got this nice little setup here. This is something I talk about daily: ratios and divergence. Okay, so the next market I'll talk about also is a ratio divergence. It's the Euro stocks, and again, I just showed you a ratio and divergence sell. A buy. This one's a sell. This was at 445. We're rallying up here, making a new high. We got a ratio and a divergence, and what happens? The market sells off. Euro stocks from the 34.90 area down to 34.75, 76. So a nice 15 tick move in the Euro stocks, which 15 ticks in the Euro stocks is a nice move. It's tend to be a slower moving contract. Okay, the next market I'll talk about is Japanese yen. Now this is a 15-minute chart. Again, you don't really see me talking much about 15-minute charts in order flow. Personally, I think it's a little bit long, but still, you're still looking for the same things. Here you got the delta scalper giving a buy. You got a nice move up to new highs. I had to scrunch this, so it's a little bit hard to read the numbers. But again, I'm really not concerned with the individual numbers inside the bar in most cases. I mean, there are times that I am. But again, I'm looking for the same things. I'm looking for divergences and ratios. Here you have a divergence, no ratio. Here you got a divergence and a ratio in the next bar. And what happens? We go from 89.61. We make a nice move down to new lows. 89.30s, even lower here. Then obviously we start to rally back. But we had a big rally. Nothing here in the order flow. Obviously at 1 o'clock we had that big bar, but again, I'm still looking at the same things. Whether it's a 8 range chart, whether it's a 4 range chart, 10 range chart, 15-minute chart. I'm still looking for the same things: ratio and divergence. Okay, so next I'll talk about is the euro currency on an 8 range chart, and what I'll talk about is point of control in this bar. Point of control right on the extreme. And again, a couple weeks ago I did a webinar presentation, and this is the setup that I gave. Look for these red bars with point of control right on the extreme, and also you have a bearish ratio. And what happens is the market makes this beautiful sell-off straight down. This is like the textbook example. Boom, we got a new high. Most volume is traded in the bar right on the high. It happens to be the high of the day. Price action in the bar changes. We close lower. We got a positive delta 300. We should have a green bar. We should be trading higher. But what's happening is everything's changed in that bar. Why? Because we ran into some stopping volume up there. It's like the market is rallying. Everyone's getting excited. Hey, we're going higher. Boom! There's a big seller there, stopping this move higher, and it just falls over. So this is a textbook example for the sell, and I'm going to show you literally the opposite, the textbook example for a buy. If I could find the chart here, it was in the Aussie dollar. Just give me a second here. Here it is. Okay, now it happened early in the session, happened about 1 in the morning, but boom, there it is. This is a textbook example for the buy. Point of control right on the bottom. It happens to be the low of the day. It's a green candle, point of control right on the bottom. You got also a ratio bounds low, indicating stopping volume here. And what happens? We rally from this low, literally up, not up to the highs. I think later we took out the highs, much later, but still, at 1 in the morning, this is something you could have bought, and you take very little, if any, heat. Initially, maybe if you got in early in this bar, you bought here, you took a little bit of heat down to here, but then after that, it was nothing. It's just free sailing all morning and into the afternoon. Okay, so this is Nasdaq. Same thing, point of control right on the top. Now you tend to get these point of control extremes more in some of these contracts, such as Nasdaq, Mini Dow, than you do in the currencies. Yeah, you get them in the currencies and even other contracts, but a little bit less frequent. I find it tends to occur a little bit more frequently in contracts like some of the smaller indices and commodities. So here's a perfect example. Boom, we hit it, you come off a little bit. It's not the greatest sell-off. I mean, it's not like you sold off from your high to your low, but again, you're looking for anything that's going to give you a move, and you get that there, and eventually it does fall over. But honestly, you get short here and it just does this meandering thing. You'd probably be getting out somewhere down here or down here before it starts rallying back up. I'm not going to say you're going to hold it, all morning like this, especially when it's just sort of up and down. But again, I did that presentation a couple weeks ago, and that's what I talked about. So again, it's not some hidden holy grail secret. Do they always work? No. There's sometimes where the next bar comes down, and then the third bar just rallies right up to you. But what the market is telling you is that there's stopping volume up here. You know, people are getting excited or trying to break it out, but boom, it just runs into a big some supply up here. That's, you know, basically halts the move for now. You know, whether it remains to be seen if it's going to be all day or for the short term. But really, what you're looking for, right, when you're trading intraday, is you're looking for these, you know, short-term movements, you know, something to stop this move. And once you realize that, hey, there's something stopping this move, yeah, then you could take your trade, right? You're only risking this up to here. If we get past this level up here where the point of control is, you know, the whole reason for the trade is over, and you should be getting out immediately. You know, you're not getting out another 5 ticks higher. No, you're just getting out right above that area, so you know where your risk is. Okay, so real quick, I'll talk about crude oil. Not a whole lot in the order flow, but, you know, with the indicator of delta scalper, I mean, I could sit here and I could talk about, you know, the delta, but, you know, it's just easier for me to talk about the delta scalper, and showing you where, you know, you had the delta expansion or contraction. So, you know, up here 2 in the morning, you're getting some new highs put in here. Boom, boom. Divergence that failed. You got another divergence that failed here. But then right after that, boom, you got delta scalper kicking off. So it's telling you there's a shift in supply and demand. We went from a demand-driven market higher here to a supply-driven market. There's a lot of supply coming into the market here. And what happens is you sell off from, you know, the 48.40 area down to new lows, 48.20. Then you just eventually make new lows. Boom, boom, boom. You know, not a whole lot here in the order flow. I mean, I can make some arguments in here, but, you know, that's a bit advanced for people. Obviously 9:30, you had the inventory numbers come out. That's why you sort of see this thin volume up in here. Now, we did rally from your lows all the way back up to your highs. You know, you got where's your high up here? Right up here, right off the high. Now, you know, very strong buying coming up here. Then gets weak up here. You have a ratio here, then delta scalper again. So, you know, very strong demand. You know, I mean, look at these positive deltas: 1100, 600, 1200, 1500, 1600. But delta scalper is telling you there's a shift, there's a change here in supply and demand. This is what a demand-driven market looks like. But now it's telling you early that, hey, you know what, demand is dried up, supply is coming into the market, and what happens? We make a move from, you know, basically this 48.70, call it 75 area, all the way down, 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 pretty much a straight line, not a straight line, but, you know, a straight angle, 45-degree angle, down, down, down to new lows. You know, so imagine that you're going from your high up here, just off your high. This is your high, 48.87. Delta scalper is telling you this early, right off the high, in real time. You know, it's not like coming off down here or anything like that. It's right here, second par off the high. So, you know, anywhere in here you could be getting short very easily. This is, you know, between 48.70 and 48.80, all the way down. I mean, where do you got any buying coming in? Do you see any buying coming in down here? No, you see some buying coming here. You know, you got a green bar, you got a positive delta. That's it. You know, a little bit of pop up, and then, you know, all selling, some more selling, all the way down, down, down. Stack selling about. It's just picking up. It's rolling downhill already, down into new lows. You know, from you know, 48.70, what are you trading down? You finally sort of bottom out down here. Honestly, I'd be looking, you know, somewhere down here, because you got this imbalance, another imbalance. Down in here really gets a bit iffy, because it's just bouncing around pretty fast. This is 9:52 and, you know, 3 seconds, 11 seconds. So, you know, this is, you know, it's a 70-cent move pretty quick. You know, it does recover back up here, so who knows, you know, maybe by the time you get out, it's trading 48.10. So, you know, okay, so instead of a 70-cent move, it's a 60-cent move. Got another delta scalper here. This one starts working out, but it turns around on you and rallies up and stops you out. But, you know, that's okay, right? That's okay. If you're getting short here, you're getting stopped out up here, getting short at, you know, 48.22, but you're getting stopped out at, you know, 48.32. That's okay. That's only 10 ticks, right? But you just had this monster trade of 60 or 70 ticks right behind you, you know. Sorry, right before that trade. So again, you know, a little bit later, delta scalper again, another nice little sell here. You know, boom, 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 boom. Again, you know, if you're sitting in a position at 1250, you know, in this bar, and it's in your favor, and then you know you got the FOMC announcement coming out, you really should be considering getting out. But again, that's up to you, the trader. And, you know, so that was it for the crude oil. So again, I talk about these same things every day. Delta scalper, I talk about ratios and divergence, and point of controls at the extreme. These are things that occur daily in the markets, and I talk about the same markets every day, over and over. Crude oil, Eminis. Today I showed you Euro stock. Today I showed you a 15-minute chart on Japanese yen. But it's the same concept, same things you're looking for in different markets. So can it work in other markets? Yeah. Can it work on longer term time frames? I mean, look, I could show you also. Let me see if I got the chart handy here. It's in the euro currency. Okay. Again, another. Where is it here? Again, I'm not a big fan of trading 15-minute charts, but the same thing that I look at, on a 5-minute chart, or say an 8-range chart or a 10-range chart, or whatever type of chart I'm looking at, is also on a 15-minute chart. Boom, here you got euro currency 15-minute chart, ratio and divergence. Now, do you get these every day on 15-minute charts? No, you don't. I find it works better when markets a bit more volatile, but on 15-minute charts, I like movement. Okay, so I don't say a problem. One of the reasons I'm not a big fan of minute-based charts is like this 15-minute chart. Look at this bar. It's 116.80 up to 88, but the bar before it is just how many ticks. It's very small. I like my bar. I like the bars to move based on price rather than based on time. But that's me. I know some people, they have to trade on 15-minute charts for whatever reason. They're stuck to them. They're married to them. But again, you're getting this move from here, 116.70, all the way down to in here somewhere. Here you get a bullish sign, but you're getting some moves, right? The same things you're looking at, exact same things, whether it's a minute-based chart or range-based chart. A tick chart. So anyway, thanks for watching this video. To learn more about order flows, visit my website, orderflows.com, or visit Delta Scalper to learn more about the Delta Scalper. I'll be making a video a little bit later on the Delta Scalper, how it performed today. So thanks everyone. Bye bye.